Hello children, welcome to the online platform of Sri Gokulam Public School Guruvayur. Children, we were discussing about ledger. Let us do some more problem related to ledger. On 1st April 2020, Mohit, Delhi, started business with a capital of rupees 50,000. So Mohit is a person who have started a business on 1st April 2020 and he have started this business with a capital of 50,000. He made the following transaction during the month of April. So during the month of April, the following transactions have been made by this business. Okay, so looking at this problem, journalize the above transaction and show the respective ledger accounts. This is the requirement of the question. Now let us do journal entry with each of this transaction and then we will think about passing the same or posting the same in the ledger. So the first entry is started the business. So as you know, when we start the business, what will be the first journal entry? You can see here I have prepared at the first you have to write the name of the company in the books of Mohit. Journal entry. Then write down date, particulars, it's ledger folio, debit and credit. And the date first thing is 2020 you have to write. On 1st April, it is on the 1st April that this business was started. So when the business was started, what was introduced? Cash. So there is an increase in cash. We know that with the rule of debit and credit, we have already studied that asset, here I am writing debit and here I am writing credit. So if asset increases, you have to debit it. If asset decreases, you have to credit it. And what about capital? Capital is in opposite direction. When it increases, you have to credit it, and when it decreases, you have to debit it. So see what we have done with this journal entry. Cash, because you have introduced cash in the business, cash have increased, so you have to write it in the debit side, 50,000. What about the capital? Being capital introduced in the business, that means capital also increase. But what is the side for capital when it increases? It is credited. So here I have credited capital account with the same amount, that is 50,000. We know the rule that debit amount should be equal to credit amount. So there is equal debit and credit amount. What is the narration? Being business started. So here first journal entry is over. What is the problem? 1st April, purchase goods from Rita 20,000. You have made a purchase. This purchase is a credit purchase. You have not paid cash to Rita for this purchase. Okay, because it is not mentioned that it is a cash purchase and the name of the party from whom you have purchased these goods is written. So from that you can understand that it is a credit purchase and not a cash purchase. So let us pass the journal entry. 2020 April 3rd, the entry is purchase account debited 20,000 to Rita account, being goods purchased from Rita. Okay, so after passing the journal entry, after writing the narration, you have to write the date on debit and credit side and then draw a line. Okay, it should not be a line which see, only this much you have to draw the line. Okay, don't draw the whole line. Next is April 4. April 4, cash paid to Rita 10,000. So cash paid means what? Cash is decreasing from the business. So cash decreases means credit side. And you have paid this cash to Rita. So see, when you purchase the amount, purchase the goods, you have credited Rita. Now you are paying this cash. That means your credited have decreased. So creditor means what? Liability. Liability decreases means what? You have to debit it. Liability, capital and income, you have to it is the same rule. So what rule is there for liability is when it increases you have to credit it, when it decreases you have to debit it. So as the company is paying the liability of towards the Rita, our liability is decreasing with 10,000, so it is debited. B in cash paid to Rita. Next entry is 6th, April 6, goods sold to Rohit 25,000. It is a credit sales. So as you know, being it's a credit sale, sales is always credit shown on the credit side, purchase is also always shown on the debit side. So same is the case with this journal entry. Rohit account debited to sales account. Being goods sold to Rohit 25,000. It's April 6th date. Next entry is on April 8, receive cash from Rohit 20,000. So you receive the cash. So cash increases. So what is the entry? Cash account debited to Rohit account 20,000. Being cash received from Rohit. April 12. April 12, the transaction is goods purchase from Rita 12,000. So again a credit purchase. So purchase account debited to Rita account. Purchase account to Rita account 12,000 being goods purchase from Rita. Next is on April 18. What is the question? Cash paid to Rita 20,000. What is the journal entry? Cash paid. Rita account debited to cash account. See, Rita account debited to cash account. Being cash paid to Rita 20,000. Now on 25th April, goods sold to Rohit 10,000. So you are selling goods to Rohit, and because it is not mentioned, it is a cash sales. So and name of the party is given, so you have to understand that it is a credit sales. So the entry goes Rohit account debited to sales account 10,000 being goods sold to Rohit. And the last journal entry for the transaction, April 30th, receive cash from Rohit 6,000. So you have received cash. Cash increases in the business. So cash account will be debited with 6,000 to Rohit account 6,000 being cash received. So children, this is the journal entries. Now from this journal entry you have to pass the ledger. Post it in the ledger. Let see, here is the purchase account. So when you prepare a purchase account, you have to prepare first of all a box. Write down debit side on your left hand side and credit side over here, right side. Date particular ledger journal folio amount. Date particular journal folio amount. Now just look out the transaction of purchases. Here you can see the first purchase. Wherever the name purchase is there, just stop there and see the entry. April 3. Purchase account debited to Rita account. Purchase is on the debit side. So on the debit side of purchase, you have to write April 3 to Rita account 20,000. Okay, so that is your first entry. Now moving back, again just go through the journal entries. Where is the next purchase? Yes, the next purchase is on April 12. So April 12, purchase account debited 12,000 to Rita account. Again the purchase is to the Rita, but it is on April 12. So April 12 to Rita account, the amount is 12,000. Okay, so just go through once again. Any more purchases there? So no more purchase. Now I will close this account. You can see that purchase account I am going to close. So when I close this account, this side that is debit side, I was having 32,000. 20,000 and 12,000, that will make 32,000. But no entry was there in the credit side. But when I close this book on April 30th, you know that debit should be equal to credit. So when I close this book, I have to carry this amount of 32,000 to the credit side. So what I will do, first of all, I will write the year 2020. On which day I am closing this? April 30th. That is the last day of the month of April. So April 30th by balance. BAL means balance. C/D means carry down. So I am carrying down this amount of 32,000 amount of purchases, that is credit purchases, to the last month of the year, that is April 13th. 32,000. Then I will close both the side with 32,000. Now on 1st May, the same amount, that is what I have carried down, that I will bring down. Okay, so what I am supposed to write here? To balance brought down. Okay, carry down will become brought down for the next day. April 30th is the last month or last day of that month, and on the 1st day of May, I had to bring down the amount which you have closed last day, previous day. So 32,000 I will bring out here. So this was about purchase. So my purchase account got closed. Now next account, I will think about the next account. Next is Rita. Rita, you can see one entry is there, two entries, second entry is there, one more third entry is also there. So 3 entries are there. So April 4th is the first entry. April 4, Rita account debited. See in purchase also here one more entry is there. April 3rd, you can see purchase account debited to Rita account. So all the related entries of Rita, if it is in the credit side, you have to write, see, Rita account debited April 3rd. By purchase account, I can't write in Rita's account Rita's name. I have to write the account from which the other that is, it is a purchase made from Rita. So that I had to mention in Rita's account. Okay, by that is April 3 by purchase account. So I have made 20,000 of purchase. Again, moving to the journal entry, you can see that on April 12th also one more purchase was made by purchase account 12,000. Now on April 4th, cash was paid to cash account 10,000. April 18th, again some cash was paid, that is to cash account 20,000. Now it's a closing date. So only 4 entries were there related to Rita. Now when I close this entry, you can see that here in this side I will get 32,000, but when I close this side I will get only 30,000. Here I am getting 32,000 and here I am getting 30,000. So this your debit side is not equal to credit side. I have to make it equal. Okay, so what I should do? Here I can write total 32,000 and 32,000, but this side is short by 2,000. So I can write here 2,000. Okay, and on April 30th, what should I write? To balance carried down. This amount of 2,000 is still to be received. Still to be paid to Rita. We have purchased these goods from Rita and now we have to pay 2,000 to Rita. Next day, that is May 1, this amount will be brought down 2,000. Okay, so this is how you have to pass the ledger account. Now next journal entry, next entry we can pass the entry for cash. Okay, cash, you can see that when you started the business also you brought some cash, isn't it? So cash, that was the first entry, second entry, third entry, fourth entry and fifth entry. So 5 entries are there for cash. So children, taking all the cash transaction, I will go to I'm passing the ledger. Okay, see, cash account, debit side and credit side. So wherever there is cash, journal entry. So see, the first entry is cash account is debited to capital account. So on the cash account debit side, see, cash account debit side, this is debit side of cash account to capital account, 50,000. A simple way to understand posting of this is, see, on debit side we will have 222. So wherever you have written 2 in your journal entry, you can see here there is cash account, so 2 Rohit. Again here on April 30th there is cash account 2 Rohit. So all those cases where 2 is there, you will show it in the debit side. And when cash is credited, all those items will be written as by Rita. Okay, and here in this case by Rita again, April 4. So you just have to see the debit and credit side and just post all the entries to the particular ledger account. Now the closing part. After passing all, looking at the journal entry and passing all the items to the respective particular account, make a total of both the side. Okay, this side you will get 76,000, but this side is only 30,000. Then what you have to do? 76,000 minus 30,000. So this side is short by 46,000. That you will write as April 30 by balance carried down. Okay, and on 1st May, to balance brought down, the same amount of 46,000 you will write over here. Same is the case with the other accounts, that is Rohit account and sales account and capital account you have to do. So with following, look at the journal entry, and as per that you have to pass the entry for debit and credit. Then make see that your debit side is equal to credit side. If not, the short, whichever side is short, that side you will write to balance carried down, and the next month, that is May 1st, you have to bring it down by using the term to balance brought down. Okay, so this is how the ledger entry, posting of items to the ledger is done. So children, practice many problems related to posting of items to the ledger. Only through practice you will get thorough with this concept. So we are winding up today's session. Meet you in the next session with a new topic. Till then, goodbye.